This Tuesday, Health and Human Services Secretary Robert F. Kennedy Jr. confirmed the decision to pull funding from 22 mRNA vaccine research projects. Kennedy stated that the data shows these vaccines are ineffective against upper respiratory infections like the flu. These budget cuts reflect the department's new policy direction, even though earlier clinical studies were the very foundation for the original approvals. The announcement rattled the industry, but Moderna is showing signs of stabilization. After watching its market cap collapse 95% from a peak of $200 billion, the company is now valued at around $20 billion, and investor interest appears to be quietly returning. Moderna's story has clearly hit a rough patch. There's an old saying in investing: buy when no one cares, sell when everyone's talking about it. So, is now the right time to invest in Moderna? Hey everyone, welcome to Finance Archives, the channel where we break down weekly analysis on US stocks. If you find this useful, hit like and subscribe so you don't miss our next deep dives. But before we get into it, a quick disclaimer: this video is for educational purposes only. This is not financial advice. Always do your own research before investing. Now, let's get into it. Moderna's story starts with COVID-19. In 2021, revenue exploded to $18.4 billion, and the market cap nearly hit $200 billion. But since then, three major factors have driven the company's decline. Factor 1. The collapse in COVID-19 vaccine demand. Revenue dropped from $19.3 billion in 2022 to just $3.2 billion in 2024. That's a staggering fall. Factor 2. The RSV vaccine disappointment. Launched in 2023, the product generated only $50 million in first-quarter sales, far below the $200 million analysts expected. And to make matters worse, while the overall market was shrinking, Moderna's competitors were taking market share. Factor 3. Government budget cuts. The Department of Health didn't just slash funding for several programs, it also required global health investments to halt all mRNA-based investment activity, a serious blow to the entire sector. Now let's look at the most recent numbers. In February 2026, Moderna reported its full year 2025 results. Revenue came in at $1.9 billion, slightly ahead of expectations but still a far cry from pandemic-era highs. The good news? The company cut its net loss to $2.8 billion, driven by a more than 30% reduction in R&D spending and tighter cost controls overall. Moderna also announced a 10% reduction in its global workforce. And here's the key number: the company ended 2025 with $8.1 billion in cash. That's a significant runway, time and resources to execute a transformation and find new growth drivers. This is not a company on the edge of bankruptcy. So, does Moderna have investment value? Yes, it's lost 95% from its peak valuation, but it's not starting from scratch. The company still holds a powerful technology platform and a cash position that on paper looks substantial relative to where the stock is trading today. The big bet now is oncology. Moderna's personalized melanoma vaccine, mRNA 4157, developed in partnership with Merck, has posted impressive results: a 49% reduction in recurrence risk. And 5-year data published in January 2026 continues to back that up. Meanwhile, the mRNA space itself is consolidating. In June 2025, BioNTech acquired CureVac for $1.25 billion, a clear signal that mRNA technology is now controlled by two dominant players, BioNTech and Moderna. That dynamic makes Moderna a potentially attractive acquisition target. The company is also holding to its 10% growth target for 2026, driven by its new combination flu-COVID vaccines. The pivot is underway. So where does this leave us? Moderna is not going bankrupt anytime soon. With $8 billion in cash, a promising oncology pipeline, and a leading mRNA platform, there is real value here. The question isn't whether the company has value, it's how much you're willing to pay for it. Right now, very few investors are paying attention to Moderna. The real debate is whether this discount reflects the end of a cycle or a long-term opportunity for those who believe in the oncology pipeline. If this breakdown was helpful, don't forget to like this video and subscribe to Finance Archives for more analysis on US stocks. See you in the next one.